Hello all, welcome to Capital Market Series, Introduction to Investment Vehicle and Fund Administration. Let's look at learning objectives. At the end of this module, you should be able to define investment vehicle, define fund administration, name the parties involved in fund administration, setting background. You are fascinated about share market, since you have always heard people saying that it turns one from rags to riches. Now you want to take a chance and make earnings from share market. However, you have also heard people saying the other side of the share market, that it also turns one from riches to rags. Since share market is highly riskier, people lose more money than what they invest. If you really want to make money in share market, then you should be really good at picking the best stocks. For that you should be good at analyzing the market. To analyze market, you should have access to market information. Moreover, to do all these, you need ample amount of time. But most of us may not have required skills, market information, or time. So how can you still make earnings in share market? No worries, there are dedicated investment professionals who are really good at investment, who pool money from investors for money management purpose. We call these professionals investment managers or investment vehicles. Let's look at who is investment manager or investment vehicle. Investment manager or investment vehicle is an individual or a company which pools money from large number of investors and invest their money in stocks, bonds, commodities, derivatives, etc., as per investment policy statement to generate returns and pass it back to investors after deducting for management fees. Let's look at what is investment policy statement. It is a document drafted between investment manager and investor that outlines general rules for fund manager, investment goals and objectives of the investors, expected return and risk tolerance, asset allocation, investment strategies that fund manager should employ to meet objectives, and liquidity requirement, etc. For example, an investor may state that his investment goal is to save sufficient money for his retirement, etc. Let's say there is a person called John, who is really good at investment. He is thinking to start a corporation, to pool money from bunch of people, to manage their money, and take a little fee for the same. So he gets some office space, hires some analysts, and buys some computers, to set up a corporation. He gets himself and the corporation registered with Securities and Exchange Commission. After registration, he will be known as Asset Management Company, and the corporation as Mutual Fund. Assume he puts $400 in his corporation and creates 4 shares for himself. Example: SBI Funds Management, Axis Asset Management Company, Aditya Birla Capital, etc. Now, you have John's corporation, in which you can invest and start earning money. But wait. Can you directly invest money in John's corporation? Yes, you can. But investment manager appoints an agent to look after subscription or redemption requests placed by investors so that investment manager can concentrate on fund management. We call this agent registrar or transfer agent. Let's look at who is registrar or transfer agent. Registrar or transfer agent is an entity appointed by investment manager who looks after subscription and redemption requests. When subscription happens, he will receive fund from investors, create new shares, distribute them to investors, and report to fund manager. When redemption happens, he will pay funds to investors, cancel existing shares. In this way, he will record investors' transactions and their data by maintaining share registry book. It also distributes corporate benefits like dividend, bonus, stock splits, etc. to investors and provide investor services like announcing new fund offer, redemption, changing funds, changing contact details, changing nominees, etc. Example: computer age management services, Equiniti, computer share, etc. Let's say you are investing $100 in John's corporation through registrar and receive 1 share for the same. Now John's corporation has total fund value of $500, also known as asset under management, and 5 shares outstanding. 4 shares belong to John, and 1 share belongs to you. Now you are all set, your earnings are in the making. John will invest your money in share market, through stockbroker, generate return, and pass it back to you, after deducting for management fee, and other expenses. Assume he buys 4 stocks, A, B, C, and D, at $100 each, and keeps remaining $100 in cash, for liquidity purpose. Total value remains at $500. Let's say, after 1 year, each stock increases in value to $200, and it receives dividend of $50. Old cash balance is $100. So, total asset value increases to $950. Fund value also increases, from $500 to $950. Your share value increases, from $100 to $190. You are really happy, since fund value almost doubled. But wait, what is the guarantee, if John performs his duties diligently? What if John misuses your fund? Do you think that John will always act in the best interest of the investors? Maybe, but no guarantee. Then, who will ensure that your fund is safe, and it is invested as per investment policy statement, after proper due diligence? Enter yet another party. We call him trustee, who administers the fund, and always acts in the best interest of the investors. Let's look at who is this trustee. Trustee delivers fiduciary duties towards investors, meaning, he will always act in the best interest of the investors. Trustee will oversee the activities of investment manager, to protect assets of the investors, administer the fund, by keeping record of all transactions, and distributing assets. Trustee ensures that investment manager complies with the trust deeds, set by trust, investment policy, set by fund manager, and guidelines, set by regulators. Finally, it reports activities of the fund, to capital market regulator. So, when John sets corporation, it is registered as trust with SEC, and funds will be administered as per the trust deeds, investment policy, and guidelines set by trust, fund manager and regulator respectively. Example, SB Mutual Fund Trustee Company, Axis Mutual Fund Trustee, Aditya Birla Sun Life Trustee, etc. Now your fund is safe, and total fund value almost doubled, from $500 to $950. Assume, John charges management fee of 1%, on total fund value of $950, that is, $9.50. Your share of fee is $1.90. There are no other charges. You might want to know the current worth of your fund, on any given day. Value of your fund will change every day, due to change in price, earnings it makes, expenses it incurs. So who will sum up the value of everything fund owns, and subtract the value of everything fund owes, and calculate net asset value? How will you get to hear about your fund's performance? Luckily, we have an institution, which provides this service. We call this institution, Custodian Bank, and service as fund accounting. Custodian is appointed by trust, to safekeep the assets. When investment manager purchases securities through stockbrokers, he sends trade ticket to custodian, and custodian pays cash. Receives securities, inputs trade, reconcile the position, and sends report to valuation department. Valuation department will then collect pricing data from data vendors, add any income that fund earned, deduct any expenses it incurred, calculate NAV, and report to registrar. Finally, registrar reports NAV to investment managers and investors. Let's look at what is fund accounting. Fund accounting refers to the maintenance of the financial records of an investment fund. Accounting records must be kept for the investor's activity, that is subscription and redemption, portfolio activity, that is purchase and sale of financial instruments, and income and expenses earned by fund, that is dividend, interest, capital appreciation, and brokerage, management fees, administrative costs and tax. Let's look at what is net asset value. Net asset value is total assets held by fund, minus total liabilities of fund. Here, total asset is asset under management, cash held by fund, income earned by fund, and total liabilities are management fee, brokerage, administrative expenses, annual maintenance, etc. So, NAV of John's Corporation is $800 plus $100 plus $50, that is, total asset under management, cash held by fund and dividend received by fund, respectively, minus $9.50, that is management fees, assuming there are no other charges. So, $940.50 is the NAV. We can also calculate NAV per share by dividing net asset value by number of shares outstanding, that is $940.50, divided by 5, that is equal to $188.1 NAV per share. That means you are making unrealized profit of $88.1 to arrive at $88.1, deduct purchase NAV of $100 from current NAV of $188.1. Let's look at who are data vendors. Data vendors are companies which source data from stock exchanges, brokers, regulatory filings, and sell them to firms, traders, and investors for data processing. They provide real-time price quotation, trade summary, corporate action, market news, historical statistics, and analytical opinions of firms and investors. Otherwise, it would have been difficult for them to get timely and accurate market information. Example: Bloomberg, Thomson Reuters, Fidessa, SunGard, etc. We are almost there, but did you notice that there are multiple parties functioning in support of investment fund, like subscription, redemption, trading, settlement, fund accounting and NAV calculation, ensuring compliance, and regulatory reporting? These supporting functions around investment fund is called as fund administration. Fund manager often outsource some or all of these functions to external parties, such as custodian and transfer agents, so that they can concentrate on fund management. So now we have full story. 1. John starts corporation. Registers himself as AMC, and corporation as trust, with SEC 2. You are investing money in his corporation, through registrar. 3. Registrar will create new shares for subscription, and cancel existing shares for redemption. 4. Stockbroker buys stocks, and sends confirmation to John. Custodian. 5. Custodian pays cash, receives stocks, input trades, and reconcile the position for by transaction, and send reports to valuation department. 6. Valuation department will collect price data from data vendors, calculate NAV, and reports to registrar. 7. Registrar reports NAV to investment manager and investors. 8. Finally, trustee will oversee the activities of fund for compliance and regulatory reporting. Debrief. Now you should be able to define investment vehicle, define fund administration, name the parties involved in fund administration. Thank you.